Hello and welcome to another update video about Cardano. In this video we're going to take a look at the Cardano chart and the Bitcoin chart, and I want to talk about my price prediction for Bitcoin that I'm going to stick with now going forward, because we have clearly moved into the bearish range now. This is not the bullish scenario anymore that I talked about. If you remember back in September, I talked about that this structure, when we started this uptrend, I was not comfortable with this structure building a strong foundation for an uptrend. I became more bullish then because we moved into higher levels, but I told you clearly, especially in the last couple of weeks, that a drop below 53k would be an enter, we would enter a bearish scenario, based on the Elliott Wave method and count and typical retracement levels. If you drop below 53k, this is not bullish anymore, and we've basically come out of this target range to the downside, hit below 53k, and we're now clearly in a bearish mode. I really want to talk about where we could be heading, because overall what we now see, that this bullish scenario has been invalidated. We can expect lower prices. So what we see on a high level here is an A, B, C correction, and you already see that this C level will reach levels that nobody really likes. Nevertheless, it's not all bad, and I want to talk about that. I want to show you quickly where I think we could be heading and what we can expect going forward. So from that wave B, which was that up there, right? We are currently, I think, doing a 5-wave move here to the downside, and I think that has been completed. So if you don't know what I'm talking about, check out my second channel on which I talk about the Elliott Wave method. It's more training online. You can find a link in the description. I've got some tutorials there, and I will create more tutorials so people can understand it more. But basically every move into the direction of the higher level trend happens in 5 waves. So we can now see that we're actually entering a downtrend, because we can identify 5 waves here to the downside. So we've got a wave 1, we've got a wave 2, we've got a wave 3, and we've got a wave 4, and we've got a wave 5. Now, if you think, right, couldn't this have been a wave and this? I mean, there are different ways of counting it. There are also extensions, so the rules are quite complex. It's looking easier than it actually is. I spent the whole afternoon checking this, and I want to take you through my thought process here. I'm not telling you necessarily that this is the right way and that I'm obviously right, necessarily, but I think this is a correct count, and I think this leads us to much lower prices. So based on this 5-wave move that we've seen here to the downside, we can also identify this as a wave A. A wave A always consists of 5 subwaves, so clearly you can see that here. A 1, 2, 3, 4, 5 is a wave A as well. Now we can see now that we are doing a retracement here, a retracement basically to the upside, not to the downside, as you would see it in an uptrend. No, we're in a downtrend, so we're retracing to the upside, and I'm going to take a look at where we could be heading in a minute. And from there I expect a wave C that goes much lower. So where could we be heading now here on this in the next moves, right? So now that we've hit the low here in this wave 5, we are retracing. And we need to take the fib levels, and take a look at where could that wave be now retrace to. So if we draw the fib levels to the low of wave 5, we can identify here a target area. I'm going to give you that target area. We just select here the colored box. So in my view, where we could be heading is somewhere in the area between, there you go, it's probably here between the 0.382 and the 0.618 fib level. That is what I expect where we could be landing. Very, very accurately, I think somewhere really in that level, and potentially, potentially even we, I would rather actually move that up a little bit. I think the retracement would rather go to the 0.5 fib level, between the 0.5 and between the 0.786 fib level. That is what I would expect for that wave B. That would obviously indicate that this will be a bit of a fake out to the upside, right? Also, what I think, this is basically my forecast now, what the price is going to do, right? Also based on pure application of the Elliott Wave rules. When you come down in this wave, in this 5-wave move to the downside, you have to correct this move in a wave B. You have to retrace, and you do that, and the most likely one for me would be a move into the 58k area. Basically this is the 0.618 fib level, 58.6k. Also this would be lying, this lies at the top of this previous resistance basically here, as you can see it. I think that's a very likely level to get into. Now, from the absolute low to the upside, that's a 38% move up. That can take a while, that can take weeks. I want to make you aware of that, because I will know, and I can tell you that now straight away, people will get too bullish. When we get up here, people will get too bullish, you know, and people will start to get in again. And what then will happen, I mean, not 100%, but 90% probability, I would say, we will see another dump. And this is when people will scream against manipulation. But this is what happens. I think we're going to go up into this range, and I think here we are going to see a reversal. That's from what I can see currently in the structure. Now that might change going forward, and as soon as I see a change, I will let you know. But this is what I think is now the most likely way. I think we're going to get up to 58k. You know, maybe only 55k, but we will see a retracement, I think, in this yellow area, and then from there we will see another 5-wave move to the downside. So from here then, this is when people get too bullish again. This is where people will say, right, it was only a fake out to the downside. We're gonna go up. We're gonna see the 100k. But the structure is now damaged. The structure of the chart is now broken. And if you have any experience in chart analysis, or if you use the Elliott Wave method a lot, you will know this. This is now broken. You can't interpret a bullish move into this anymore. And this is typically what happens. You see these retracements, the wave B, they can be very, very difficult. They can be really, really difficult, these waves B. But this is, I think, where we're going to land, and then we're going to go down in a wave C, but that wave C can go pretty low. And typically, because this was a wave A, all right, so the wave C target is normally the 1.618 extension, right, of the wave A. So primarily I would expect here a move into the 25k area. Okay, yeah, this sounds shocking. I personally don't believe it, that we will get down that far, but the pure application of the Elliott Wave method, this is what we have to expect. And maybe we only land here at 30k, but this is, I think, where we're going to land. And theoretically, we could even go down to the 200% extension at 15 to 16k. Now, is this realistic? I don't think it's realistic, but anything can always happen. And this is what I see now in the charts, right? And you know why I say it's not all bad before you switch off. Bear in mind, I did talk about this not being a good structure a couple of months ago. I also talked about in September about Cardano going below $2, and nobody believed it. This is, by pure application again of the Elliott Wave method, this is the measurement of sentiment, market sentiment, psychology, what is happening in the markets, pure psychology between buyers and sellers. And you know, I didn't create this rule, these rules, they are quite complex. No, it was someone again who at the time predicted a crazy bull market, or was it the other way around? I don't know. He definitely predicted something that many people didn't believe, and yeah, he was in the right, and this is what made him famous, you know, with his method, with his wave principle. And yeah, I'm pretty much obsessed with it, but this is what I see now, and don't become too bullish here. What this area could be used for, if you want to do it, and I'm not quite sure if I'm going to use it, but if you want to do it, you could use this for profit taking, maybe to exit your positions that you opened somewhere in this range. And this is not financial advice, but this would be the last possibility in my view, to exit positions with a possible profit, or even, you know, cost neutral, before we drop much lower. Yeah, this is what I expect. This would also go in very well, be in line with this larger ABC here. Yeah, so this would all work out very well, and this larger wave C would actually indicate lower prices, which is also why I've drawn this target level quite wide actually. Yeah, not good news, but from here then we're obviously going to see a turnaround. Yeah, because after this ABC, in my view, we are going to see another move up, a strong move up. I think from here we can see the 100k, maybe the 150k, but hopefully from here we can build a solid structure that supports the 100k, because this is not a solid structure. And I talked about that before. Obviously, the higher you go, you know, how long can you talk about this, right? When you reach new all-time highs, people would call you crazy, and so obviously, you know, at some point you have to stop talking about it when you go into all-time high territory. But in the end, it just shows that this was just a wave B. It was an overshooting wave B, and now we're moving down. And yeah, there is no, in my view, no alternative scenario really now. I think we have to really go down. That is my primary scenario, unfortunately, now. And I just want to make that clear now, not to scare people away, not for clickbait. You know, I don't really do any well, a little bit is always necessary, but I don't really do massive clickbait. No, there are no emergency videos here or anything. But I try to educate you, first of all, about how to interpret these charts and where we could be heading. So don't think it's all lost. I think there's an area where we could exit some positions before it goes down further. This area could start, if you have any doubts, it could possibly even start here at 52K. You know, you might want to start exiting some positions there. But again, I'm not sure if I'm going to do it or if I'm just going to hold on to my positions. Maybe I will exit some if I can make some profits just to reduce the risk in my portfolio and then to be able to buy at lower prices. So again, what would that mean for ADA? So it's a bit of a long video, but I really want to make that clear here. What would that mean for ADA? Well, ADA, in my view, it's, and again, I repeat it, I think it's still a bullish chart. It's a bit different to Bitcoin, where we had a bearish scenario at 53K, whereas the Cardano chart is actually remaining in a bullish scenario for me. And we still have this ABC, and we have a wave 2 together with it. That wave 2 can theoretically drop all the way down to $1. I did say that before. And now, I mean, we are now 142. And if Bitcoin manages to climb up, let's say even to 55, 58, or even again to here 63K, where many people would become too bullish, you know, maybe ADA at that point will have hit the $2 level again, you know, maybe even 220, maybe even 240, I don't know. Then it has a massive buffer. Also, you know, when Bitcoin drops, let's say, what is that for Bitcoin? Like, let's just call it from here. Let's say Bitcoin gets up to 58K and it will drop to, and let's just say it drops to 30K, right? I mean, that's pretty much a 50K drop, okay? Roughly. That's pretty much a 50% drop. So that indicates if Cardano can climb up to the $2 level, right, when Bitcoin also climbs up, it has probably enough buffer, 50%, to keep the support of $1. And if it holds the support of $1, then as soon as Bitcoin then retraces or moves up in an impulsive move out of this yellow box in a new wave up to 100K, maybe even more, in a solid structure that will support that, then Cardano, I think, can follow and turn around as well. For that, Cardano needs to stay within this bullish range, above $1, definitely. And to be honest, that level here did hold really well, the 125 level. I think this will be a massive support, and it will also be massive support because I did tell you before here just about Bitcoin that the C wave, which will be here the low, so you have in this wave 2 here, you've got an ABC as well. So in this ABC, again, the wave C target is typically the wave A 1.618 extension, and you can see how that works out. The 1.618 extension from the wave A is exactly 125. Yeah, you can see that here. And that 125 is the lower target level of the yellow box that I gave you. Just looking at the retracement from the other way around, it's also the 0.887 retracement level from that wave which started here on the 20th of July all the way up to the 2nd of September. And from there, we obviously were tracing down now to the 0.887 fib level, the last key fib level, but it's also looking the other way around, the 1.618 extension of the A wave, which is the perfect target level for a wave C. So, you know, maybe it is even going to hold that. So it's not all bad for Cardano, especially as Cardano has now reclaimed 140 again and is climbing up, obviously going to get to a key resistance level now at 146, 147. But as I said, Bitcoin will go up further, in my view, in this wave B currently. And Cardano is also coming up higher now again. And is possibly getting to, you know, if Bitcoin is getting to these levels, it could possibly get to 180, maybe, you know, $2, and then has possibly enough buffer to stay above $1. That's what I expect. I expect Cardano to hold above $1. Clearly expect that, but again, I don't have the crystal ball. I'm not making the markets here. But yeah, that is what I expect for Cardano. Going up with Bitcoin now, following Bitcoin. And what did I just say? If Bitcoin continues, let's just say, you know, from here, Bitcoin, where are we now? At around 49K. And you can see we're climbing up already. 49K to, yeah, pretty much here, 58K. That's a 20% increase. What would that mean for Cardano? Let's just take a look where we are now, 143. Yeah, a 20% increase would take us to, yeah, 172, 170, 175, whatever, somewhere in that range. Maybe here, this 175 level, and maybe we can do even a bit more, going out all the way up to 180, 181. So that's pretty much my take currently on Cardano and Bitcoin. I hope it didn't destroy your weekend, but I think we have to assume that now. I try to be very honest with you, and I think this is going to happen now. As we cross below 53K, expect another move to the upside where possibly some profit taking and some exiting of positions might be possible. And then I expect a strong move down. Yeah, this is another bearish scenario which has been sort of activated, and the bullish scenario has been invalidated, unfortunately. So hope you appreciate that I stay honest with you. If you like the video, please smash the like button, subscribe, and also comment. And tomorrow, for all channel members, don't forget there will be a live stream. Don't really know what we're going to talk about yet. I need to think about that. In the last stream, we talked about some very, very interesting projects. So yeah, I will definitely keep you updated. And tomorrow, 1700 UTC is the live stream for all channel members. If you really like the content, you're not a channel member yet, maybe you want to consider to join or try it just for a month or so. I would highly appreciate it. It's a great community, great core community, and especially on days like these or in, you know, weeks like these, a community like this definitely helps, and it helps myself as well to remain calm, you know, and basically look forward into the future positively, because, you know, what comes down will come up again, and this is definitely not the end of Bitcoin or crypto or Cardano. Yeah, see you in the next video. Thank you. Bye bye.